Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Guys, it's happening. We're getting our move that we've been talking about, but we're also going to talk about why that's not good. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
All right, Bob. So the CPI numbers come out. I mean, if you really look at the numbers, I don't think it's anything to rejoice about, but we know how these markets are. We know how the algos are. Looks like we're going to get the blow off move that we are looking for. But, and it's a big but, you've put together some slides here that the folks at home need to see, because I think it's really going to tell the tale after the pump happens, what's going to happen going forward into next year.
Yeah, Phil. Look, they manufactured a beat on the CPI headline print. Supercore was higher. We're now higher than the Fed's 2% target now for over 3 years. Inflation's still accelerating, even though they're telling you it's decelerating.
Right.
But the number that came right afterwards, which caused the market to kind of dip for a short period of time, retail sales came in lower. Now, that's important because in an inflationary environment, companies are charging more for their services. So if retail sales are falling in a rising price environment, that's a divergence to pay attention to, meaning people are they just can't spend and their purchasing power is getting eroded. So we're going to show you a couple charts here that will blow you away. Now I know why people are pissed and morose. So let's get into it. So Biden never shows this chart when he's out there bragging, Phil. Yeah. Hey, we got inflation under control. Okay. Our rate of ascent has modulated some, but you're not able to catch up. Look at this move. I mean, was the inflation rate, and then we had the COVID kick, right? The spending binge, and now we're still accelerating, but at a decelerating rate, which is absolutely amazing. And they're calling this good news, Phil. If Powell wanted to declare victory, he needs to go back to 4 years ago, and that's his target. So he needs to create about a 20% deflationary decline in real costs to say that we actually beat inflation. They don't want to beat inflation. That's a misnomer. And maybe we'll talk about that next week. The Fed is actually manufacturing inflation. I know it's hard to believe, but that's exactly what they're doing. And they're doing it while they're gaslighting you on why they think they're going to get inflation under control. They don't want inflation under control. They just want the debt to be paid off with cheaper currency. The next chart will show you why the consumer is struggling here. This is nominally prices have been rising, right? And people have to pay it, right? You have to go to the grocery store, you got to go to the pump, you got to go pay your insurance, et cetera, et cetera, et cetera. But inflation adjusted, retail sales are falling. And, Katie barred the door when this thing rolls into negative territory. But it doesn't even have to get there, Phil. This next chart is the one that I've always been most interested in. This is purchasing power, okay? And you can see purchasing power has fallen on average $8,000, Phil. 60% of that is through purchasing power decrease, relative decrease. We just showed you why. And then financing costs is increasing. And so we got a recipe here where basically an anaconda is wrapped around the American consumer, and it is squeezing, and there's no way out. Whenever you exhale, it tightens the grip even further, and you're going to suffocate. And I think we're getting to that point. Credit limits, bankruptcies coming. They're not going to be able to gaslight people anymore. And I think the consumer sentiment numbers last week told the tale. People aren't falling for this anymore. Phil, I'll throw it to you.
Yeah, and we're a consumer economy, so if you're wondering how we're going to get a recession, this is exactly why. And we're going to see retail numbers continue to decline, and we're going to see unemployment continue to creep up. So we're going to get into a negative feedback loop. Again, it's overdue, right? I mean, we're supposed to have a recession every 6 years or so. It's been, 14 now? So the bad thing about that, though, is that I think we're going to probably end up with a more severe recession than we would typically get. And there's no more accommodating or room to accommodate, at least not in the beginning because inflation is such an issue. So I think what's going to happen, Bob, is the Fed's going to want to see clear indications that inflation is definitely decelerating, maybe even deflation for a bit, and then they'll come in swinging. Now, what's interesting to me on that is how quickly does the inflation reaccelerate once they do that, right? Because basically what we're dealing with here is inflation that's out of the bottle because you've had over a decade of easy money policy from the central banks. And that was driven from the institutional banks because they're like, hey, we're in this new era now where, we can trade these, index funds or the stock indices themselves, now they're turning into like cryptos, right? They're just extremely volatile and they didn't used to move like that. And it's like the new drug. Well, you and I end up paying for that. And we're seeing that today, but the consumer is dying now, and that's the end result. You cannot have that ad infinitum, right? Without some sort of, you got to pay the piper at some point. So we're going to do that. We're going to see that probably going into next year. And, I hope it's not very severe, but you have to be open-minded about this stuff. If you're not going to have a recession for 13 years, then probably the one that you do get is going to be, more severe than the average.
Yeah, and I'll be closed-minded. It's going to be really severe, but it's going to be a tale of two tapes, right? So I think we're going to show you later this week. If you have money, you're loving what the Fed's doing right now, and you have options as the stock market actually rolls over. If you're poor, you're screwed. There's no way out for you. And when I mean poor, we'll show you another chart later this week, what poor really means to America anymore. Our poor are richer than most of the rest of the world. That's how upside down we've become with these cost structures. So stay tuned. Hey, trade with us. We've been having absolutely a great time, in terms of being able to help people navigate this market. You don't have to be a victim here, okay? It's okay to be macro bearish. It's not okay to not make money. And so we can complain about the economy while we're putting money in our pockets and protecting our families. So come to tradelikeagenius.com, tradegenius.co, check out our specials, check out our track record, and check out our algorithm. I think you'll really, really like what we do here. And with that, Phil, I'm done for the day.
We'll see you guys tomorrow. Take care.
Trade Genius.